Hello, hello, hello. Come on in, come on in, come on in. Happy Tax Tip Tuesday. Come on in, come on in, come on in. Hello, hello, hello. Come on in, come on in, come on in. I'm going to go live. I'm live, but I'm going to begin in about 30 seconds. While I'm waiting for people to come in, come on in, say hello when you arrive. Tell me where you're coming from. You have a business, let me know your business. My lives get seen by quite a few people. So it's an opportunity to shout your business out. Put my calendar in the link because the topic today is your business structure matters. I'm going to go into detail on why it matters. Okay, so come in. Let me see if I can mute my email. Come on in, come on in, come on in. Okay, so I am Tracy L. I am the CEO of TLJ Professional Services, where we are about all things financial. I bring to you over 35 years experience in bookkeeping, accounting, taxes, coaching. I have a master's in business, a master's in accounting, and a master's in public administration. Now, today's Tax Tip Tuesday topic is your business structure matters. So let me define what I mean by that. Okay. So your business structure is your business type. Okay. Is LLC, sole prop, C Corp. If you elected to be an S Corp is a tax election to take advantage of tax benefits, okay? But it is not a business structure. You're either sole prop, okay, LLC, or C Corp. And you could be choose to be taxed as an S Corp if you are an LLC or a C Corp. You cannot elect to be taxed as an S Corp if you are a sole proprietor. Um, Sole proprietorship for the most part, or in some businesses, business entities, all of that, you're not even considered a business. Okay, so unless you elected to have an EIN number, fictitious business name, is more or less a step above a hobby. So therefore, you don't get no tax benefits. But this, hey, Miss Laurel, real estate, okay, LLC and S corp, okay, great. And that's excellent actually, for the real estate industry. Okay, so the reason why your tax structure matters because it directly impacts your taxes. Okay, people don't think about that. So there's a bunch of people that jumped on the LLC bandwagon during the pandemic, right? Because everybody was creating new businesses and everybody's like, oh, you need to be an LLC, you need to be an LLC, but they didn't tell you why or the tax implications um, with being an LLC. Okay. And then some people think, okay, well, I can't be an S Corp because it's going to cost more, or I'm not big enough yet. So you'll hear different responses to that from different accountants. Me personally, I believe in begin with the end in mind and laying a solid foundation from the start. Okay. It don't matter if you ain't made a dollar yet, because remember, you're an LLC or a C Corp. Okay. LLC or C Corp, you could be taxed or elect to tax yourself as an S Corp. The benefits of an S Corp is things like paying yourself a salary, which you can't do that in LLC or C Corp, not as the owners, okay? Not as the shareholders, as the members, unless you elect to be an S Corp. So that's one of the benefits. You get to reduce your taxable income by your wages, okay, through the business. Um, Sole prop, you cannot do that. Now, I do hear that people actually do that, and that's wrong. Okay, so let's be very clear about that. You are not supposed to deduct the money that you take out of the business as your wages, right? As an expense of the business. It is not as a sole prop, neither as an LLC, okay? Or a C Corp. It's only with the S Corp election that you could take out the money from the business and it's treated as wages as a deductible expense to the business. Okay, so let's be 100% clear on that. Um, if nothing else, there's so many more benefits to being an S corp, but if nothing else, that alone is a benefit because not only does it eliminate that surprise tax bill after you've gotten your tax debt or tax liability, rather, your taxable income down to zero. Self-employment tax, if you have a profit in your business, can result in additional taxes. That's your old age survivor benefits. Okay, that's your Social Security and Medicare. Okay, so those taxes come after the fact, meaning that you have to pay that portion. And that's where people get caught up as well, because as a profitable business, that's why you go into business, right? To be profitable, to make money in business. Um, you still have to pay those self-employment taxes. Okay. And a lot of times that could take you from having no tax bill to now having a tax bill. So be mindful of that. With the next corp election, you will not have that particular tax bill because you've paid taxes through your wages, okay, and throughout your payroll periods. So those are your prepaid taxes. So does your business structure matter? Of course it does, okay, because it's the same thing. If you're a sole prop, you cannot deduct your health care, okay. Now, you can deduct healthcare on your Schedule A, right? It's a personal expense. It's no longer a business expense. Okay. Same thing is contributing to like your retirement and stuff like that. That is not a deduction for the business, it's a deduction for your personal. Okay. Those things like that directly impacts your tax liability. Okay. Like I said, you're in business to make money, right? You're in business to have a profit. So you want to make sure that you're strategic, always get tongue tied on that word, strategic in tax planning, right? So things we offer again is the bookkeeping, accounting, tax preparation, but we also do tax planning. Okay. We do retirement planning and we do business coaching. All of these things are done so that you can pay a fair portion of taxes, right? Because that's what helps the world go round. We want to pay taxes. We want to pay our fair share of taxes, not they taxes, my taxes, his taxes, right? We want to pay fair share of taxes. So, with that being said, we want to make sure that we leverage the different tactics or ways that we could pay just our fair share and not more than what we need to pay. And part of that is being an S corp. So you may hear some accountants say, "Oh, well, you shouldn't be an S corp till you make $50,000 a year or till you make $75,000 a year." That's not my philosophy because the bottom line is you still gonna pay the same $800 that you have to pay for being an LLC or a C corp anyway. There is no additional taxes for being an S corp, and you actually get better tax deductions being an S corp. So that's me, right? Now, to be a C corp, you really don't want to stay a C corp because you get the double taxation unless you're looking for investors, right? You're looking to have your business publicly traded, right? That's the benefit of being a C corp because you can go uh, publicly traded, where you can't do that as a LLC or a sole prop for sure, right? But other than that, you don't get the benefits, the tax benefits of being a corporation unless you be an S corp, like writing off your salaries. Otherwise, it's considered a dividend, and you're liable to your shareholders as a C corp. Okay, in the LLC, more multi-member or single member, it could be either or. By being an S corp, you get to write off your wages. You get to write off some of those fringe benefits that you could write off if you was employee anywhere else, right? So I always recap what I was talking about. My daughter is here to pick up my grandbaby stuff here. Um, and then these are the spoons. Okay. Um, so to repeat what I was talking about. So let me reintroduce me. I am Tracy L. Tate. I am the CEO of TLJ Professional Services. We are about all things financial, providing bookkeeping, accounting, tax preparation, tax planning, business coaching are our primary services. But we do business formation. So we do everything from setting your business up all the way through tax prep. Okay. So, and getting you loan ready, your taxes or your documents ready for loan applications. But to recap what I was talking about, your business structure does matter. What I mean by structure is the type of business you are, whether you're a sole prop, a LLC, or C corp, or even an S corp, right? So the S corp is the tax election to take advantage of. Um, I won't call them loopholes because they're flat out the everything that you could pretty much get as an employee working for somebody, you could get that with an S corp, okay? And it can be deductible to the business. Now, some items like medical, it may go as taxable income to you, the employee, but it's still a deduction for the business, okay? Your wages are a deduction for the business. Your medical is a deduction for the business. You may have to count it as income on your return, on your in your W 2, but it's still a write off for the business, right? So, as an S Corp, the business does not pay taxes. As an LLC, the business does not pay taxes. As a C Corp, it does. And as a sole prop, it does. Okay. You're paying taxes even on the sole prop. So, on the sole prop and on the C Corp, not only do you pay taxes on the income that you make or the wages you have, the money that you make, your profits in the sole prop, but you pay self-employment tax in the sole prop, and then you pay taxes on top of the money that the C corp already paid taxes for. If you took money out the business, okay. So I say all of that to say your business structure does matter. Okay. It matters a lot from a tax perspective, but it matters a lot from a strategic perspective as well. What you're trying to do in business um, should dictate what type of business structure you should have. There is no one size fit all in business. That's my philosophy. Okay, just because I'm an accountant and they're an accountant don't mean that we both should be S corp or we both should be C corps or LLCs or anything else. It does not work like that. The only thing, so like as a real estate professional, in order to get other people's money to build your business, you have to be at least be an LLC. They will not lend to sole props. So it matters from a LLC, a lending perspective. And you guys may recall when the PPP first came out with the pandemic, they wasn't lending or they was not giving PPP money to sole props because they didn't see you as a business. It wasn't until they really looked at the numbers at who they were trying to help and who got overlooked that they said, okay, well, we need to include sole proprietorship, okay, because that's a lot of people in business. Okay. But they did not see you as a business. And that's why there had to be an additional round of funding of the PPP in order to include you because it went to those that was legally registered. See, as a sole prop, you do not have to register your business with the federal or state government. Okay. If you're using your name, your own name, the only way that you pretty much register with the sole prop is if you're doing DBA, doing business as, right? And it's not your name. So like with me, I started as Tracy Tate Bookkeeping when I was a sole prop. I didn't ever register. I didn't have to have a EIN or nor did I have to have a fictitious business name because it held my name, right? So I wasn't even registered. If I don't file no taxes, they don't know nothing about me. And you sure can't look me up, right? So as a sole prop, you're not legitimized unless you do a fictitious business name because that's public information, right? And you get an EIN, which is not information. However, it does create or separate your social security number from the business. That's what it does. Okay. You get no tax benefits from it. As an LLC, you are a sole prop. The only difference is it limits your tax liability. That's it. You are considered a legal business, though. Somebody can look your business up on the state website, Secretary of State for any state, and see that you are a legitimate business. You are considered a legitimate business, but you get no tax benefits. You still have to pay that self-employment tax. Okay. It is considered a pass-through entity. Therefore, the business does not pay taxes, whether you're a single member LLC or multi-member. Okay. Does not pay the taxes. You, the individual, do based on your profit or loss. Okay. Like I was saying earlier in this video, even if you get your tax liability to zero. So what I mean by that, let's say you have W-2 and you have a business, or you just have business income. That's your revenues, right? That's your income. It gets reduced by either the standard deduction or itemized deduction, whichever is higher, because whichever is higher is going to reduce the taxable income. Okay. So it reduces your taxable income. You can get your taxable income down to zero, but if your business was profitable, you still have to pay self-employment tax, which is after that liability, right? So even though you might have got your tax liability to zero, your self-employment tax can now become the tax due for the business. You will not have that issue with as an S corp. Okay, so I am very pro S corp. I am biased to S corp because I see the benefits of it, and it doesn't matter if you're just getting started or you're building on top of layers, right? I believe in a solid foundation. That solid foundation is picking the right structure for you. There is no one size fit all, but picking the right structure for you from the start. Okay. Because sometimes when you've already established yourself, you've already branded yourself, when you go to do something else, it may not be available in that higher tier, right? So just because a name was available as a fictitious business name and you were using it, when you go to making an LLC or a C corp, the tax as an S corp, it might not be available, but you have all this branded stuff, right? So always think about it again with the end in mind. What is my big picture? What am I trying to do? Am I trying to leave a legacy with this business? Am I trying to have multiple streams under this business umbrella, right? Should it be a parent company with subsidiaries underneath, multiple LLCs, or doing DBAs, doing business as, right? That matters. So your business structure matters. Your business type matters. Business structure equal business type. Okay. So it's really what's your plan? What is your big picture for you? And that's how you should determine what business structure you should be in. Now, we do a free consultation. I put the link in the chat. We will look and see if you're in the right business structure, right? Get your taxes prepared. Something that I always talk about is finding the tax preparer that you could grow with, right? That will know what's going on with you and your business year after year, right? If you hop around with tax preparers, you run the risk of leaving money on the table. And what I mean by that is you may end up overpaying on taxes simply because you forgot to give them a document. Not all tax preparers will ask you about the missing documents. Number one, whether you're a repeat client of theirs or not. Not all of them will do that. But when you go to big box chains, you might not even get the same tax preparer year after year, like a H&R Block and all these other big chains, Liberty Tax. You may not get the same preparer, so you can't establish that relationship where you can have that conversation before you add a new division to your business, or before you start a new business, or you have a family, or you're getting married. It's things like that that's important to know and have that relationship with your tax preparer so that you know the tax implication, right? So again, I put the link for our free consultation in the chat. That was one of the first things I did when I came on this live. But your business structure matters. So book a free consultation for tax prep, and we could talk about your business structure. We could talk about your tax return and whether or not you need tax planning, because we do them all. This has been my Tax Tip Tuesday. Your business structure matters, okay? If you don't hear nothing else I said, please know it does matter. And it matters to your big picture, right? To your vision of where you see your business and where you want to take your business. Not right now, this minute, because you're not going to stay where you are right now in this minute. So that's that big picture I'm talking about. Where do you plan to be in the next 6 months, 1 year, 3 years, 5 years? Let's look at that and plan that out because that should be really how your business structure should be determined, your big picture. Okay. So take advantage of that free consultation. Press replay when you hear this again. Thank you for joining me on this Tax Tip Tuesday, and I will see you next week. Be blessed.